Morning and welcome to the video edition of Traders Espresso for Friday, March 2nd, 2018. I'm sure a lot of people, especially longs, are happy that it's Friday. It's the end of a tumultuous week for the markets in general and for equities in particular. The U.S. indices added a third day of losses in the midst of mixed economic data, Jerome Powell's testimony before the Senate Banking Committee, but the big thing was fears of a trade war as President Trump announced a 25% tariff on steel imports and a 10% tariff on aluminum imports. Now, the order hasn't actually been given and the details are still kind of sketchy. We don't know if any companies are going to be exempted, and we don't know what kind of products are going to be covered. What we do know is the way that the markets are reacting and the way some of our trading partners are reacting as well, largely condemning the move. President Trump has come out and said, trade wars are good and are easy to win. With an economics background, I don't know if I agree with that statement, but I'd like to hear his argument. Looking at the key indices and where they sit relative to particular technical indicators, most of them are touching or slightly above, finding support at their 100-day moving average. So the Dow Jones Industrial Average, you can see it bounced right off the 100-day MA. The S&P did the same thing. The Nasdaq is well above its 100-day moving average. So it didn't touch it. It's still above it. Now that could change today. The futures are pointing to a pretty big move down at the open. Dow Jones, the mini Dow futures are down 1%. The Nasdaq futures are down 1.3. The S&P futures are down 0.83, and the Russell's down 0.75%. VIX is up. It's above 25 again. It's 12.73, and the VIX futures are up as well. Gold is up because the dollar is down. I think it may have more to do than just the fact that the dollar's down. There may be some safe haven trading there as well with the third day of equities volatility. The yen is catching a bid. The yen is strong. That's as a result of some economic data that came out in Japan overnight. Also, the Japanese, Bank of Japan, Japan's central bank, coming out and saying that monetary easing, it coming to an end is within sight. Not going to happen this year, and kind of holding the cards close to the vest as far as when it may happen. But the fact that they're even talking about it, help bring some strength to the yen. Treasury yields are up. The index on the 10-year Treasury yield is at 2.837. That's up 1 2/10%. So we've covered the majors. Energies are down with the exception of natural gas. All the metals are up. I mentioned gold, silver, copper, platinum, palladium, all up. The softs are mixed. When I looked at it, corn was flat, soy was up, and wheat was down. You can see the NDX is actually just right at its 25-day moving average, so it's got a ways to go before it hits its 100. And then the Russell, doing the worst of all of them. The Russell broke below and closed below its 100-day moving average yesterday, and it's on its way towards its. This is the 250. The 200 would probably be right up about here, but that's where it's on its way towards its 200-period moving average. All of the major indices, if you were paying attention, formed a bearish stochastic crossover on the day chart. So the bulls are definitely not in the driver's seat. There's not a lot of economic data coming out, thankfully. Investors have enough data that came out. In fact, it would be safe to say that investors were deluged with enough data pertaining to GDP and prices, purchasing managers index and things like that, painted a mixed picture. And the fact that Jerome Powell yesterday in his testimony before the Senate Banking Committee explicitly said that there is no evidence that the economy is overheating, that didn't relieve investors' concerns. Initially, the sell-off started on the 27th of January because of concerns about inflation, runaway inflation. Jerome Powell is saying we're not seeing it yet. We just want to head it off. The core PCE number came out yesterday at 1.5, which was at consensus. The Fed's target is 2. The Fed's been trying to hit 2% for 5 years now and hasn't been able to do it. Finally started to see wage inflation start to gain some traction. And, when wage inflation occurs, then you expect inflation to kind of spread out to the rest of the overall economy. Taking a look at, what's coming out here in terms of economic data. The Consumer Sentiment Survey comes out at 10 o'clock Eastern. And that's it. So, which is good because investors have enough to think about and chew over going into the weekend. And like I said, the futures are pointing to pretty, very, very soft open. I shouldn't even say a soft open. It's going to be a negative open. There may be some recovery and maybe a bounce, but right now it isn't looking good. So that's it for this Traders Espresso. We'll see you in the live stream, and thanks for tuning in.